Good morning, everyone. I'm Vince Lancy. This is the Gold Fix Market Rundown. Bear with me. There's the home page. We will be discussing the fact that President Trump just put critical minerals on a 180-day countdown with price floors, trade negotiations, and potential Section 232 actions now firmly on the table. This is big news. Start with the markets. 10-year yields are unchanged bid. The dollar is up 20. The S&P 500 is up 31. The Nasdaq is up 245. Wow. Oh boy. Gold is down 15 at 46.11. Silver is down $3, over 3%, trading $90, but it was down significantly more. Uh, Suffice to say, it's a crazy market. Copper is down 11 cents. That's almost 2%. At 590. WTI is down a buck 85, 59.39. Natural gas 323 up 7. Bitcoin unchanged. Ethereum unchanged bid. Palladium down 14.15. Platinum down 25, 28, depending on what time you look at it. And grains are all up in a, well, soybeans are lagging, but grains are up. Okay. Comment about the markets. The news item that we're going to discuss here is why you're bullish, okay? But events can come out to undermine the bullishness. Like if China negotiates with us rare earths for, you know, silver, something like that, rare earths for oil, then everything could collapse as a little bit of kumbaya peace happens. And we want you to be aware of that. So, but you did have your first dip, which is what I was concerned with. Your big first dip in silver was bought, but the day's not over yet. So let's just be careful of that. I'm a little disturbed that oil is down $2 almost. I mean, I know why oil's down $2 because we didn't blow up the Hormuz Strait yesterday. But nevertheless, uh, those tensions haven't gone away. So I don't know why the market has sold off as aggressively as it has, considering the CTAs are all short and they're getting their ass handed to them right now. They're still in the money though. All right. President Trump signed a proclamation ordering negotiations to adjust imports of processed critical minerals after a Commerce Department probe warned America's dependence on foreign supply chains threatens national security. That's all you need to hear. The plan targets materials like lithium, nickel, cobalt, and rare earths, and silver, and copper. The administration will seek price floors with allies to prevent predatory pricing and stabilize markets. No tariffs yet, but if talks fail within 180 days, minimum import prices and Section 232 trade restrictions move into play. We go into detail on this. What are price floors? They're the demand side of tariffs. Um, there is an extended audio which we also tie together some related developments. We argue in that audio that the new U.S. proclamation on critical minerals signals the imminent use of government price floors to secure strategic materials such as silver and copper. Price floors they act as a de facto demand subsidy, ensuring supply while avoiding overt tariffs. The policy implies aggressive stockpiling of above ground supply, infrastructure investment, which we just saw, and eventual government ownership of market pricing power. What does that mean? Government ownership of market pricing power. That's corporatism. We also believe markets are already reacting. It should be obvious now. And that future opportunity lies less in metals themselves and more in small, well-run mining companies with proven reserves and limited capital access. Now, I'm not saying sell your metals. I'm saying that uh, if everything that I'm describing here is true, then metals go up, right? But then miners go up as well because it's obvious that if you need to secure an industry to reclaim it on your onshore, you need to subsidize. You need to help these people. You need to help these miners out. Give them some money. Pay higher prices for metal. Give them uh, give them financial leverage so that they may create operational leverage. And that's the beauty of this. So if you're buying metals because you're bullish and you buy the right miner, I don't know who the right miner is, You buy the right monitor, you're going to get the metal effect as well as the tailwind from government intervention. And that's the story. It's a huge story, and no one's talking about it. Only, I would say, only CEO technicians saw it before us, which we're a little bit pissed about. He saw that first right away, and he sent me a text last night. I'm like, oh yeah, this is great news. Thank you. And he wrote a nice story on it. I have that link as well in our story. Moving on. News and analysis. That's yesterday. Um, Silver, watch this, please. That's the Josh Fair video. If you haven't seen it on Twitter, I have it there as well. And it's embedded with his Twitter link. Gold Investment Primer. That's the Goldman uh, overview of the gold market. I think it's excellent and should be read by all brand new premium subscribers or people that are trying to figure out a little bit more about metals and drill down into it. China silver squeeze. This is what we think is going on. We're not 100% sure yet, but our financial analysis is the mirror of Josh Fair's physical analysis. So let's see what happens there. U.S. mint shortage rumors persist. That was the actual news item yesterday in the PM recap, and the silver mint delay and Costco restriction surface. So there's plenty to read. Too much metals. Anyway, it's going to wash out, and I'm going to be caught long, and I'll be all miserable. But it's the way it is. Coming soon, Metals Exec breaks down the latest big news. We're going to take his video, Josh Fair's video, and we're going to break it down for readability. So you can watch the video and you can read more than a transcript. It'll be a breakdown. It'll be a research and analysis piece. Why miners should be watched closely. That's the knock-on effect of what we just read, what we just discussed with you. And the rest of the world, AI is so stupid. World rest. Rest of the world. Why? I'm sorry. No, I'm sorry. It's the world reset. Jesus. Oh my God. All right. Why this is not an option for the USA? Meaning we must change our economic engine so that we are makers of things and exporters of things. And if you're a neo-Keynesian, as I am genetically, you're like, well, why do we have to do that? Why can't we just keep doing what we're doing? I'm going to tell you why we just can't keep doing what we're doing. Because they won't let us do it anymore. And if they won't let us do it anymore, we can either bomb them or change our economy. So, milkshake aside, we're not going to bomb them, at least not yet. And more. Data, we got a lot of speakers this week, Thursday and Friday, and we had CPI and PPI yesterday. Please buy a mug, a sweatshirt, a hat, whatever floats your boat, and support independent media. We just purchased a couple mugs for someone that we're close with who has a young daughter because the mugs are so big they're basically cereal bowls. So, all right, have a great day. Let's take a look at the market. All right, I like Poly today on the 1 hour. This is good. That line was green, now it's red, so it looks like we want to retest, right? I mean, you got the big dip, and you got the big dip down to 86, and somebody caught that falling knife, and that's the people who understand what's going on with price caps or price floors. Where they buy it means it's underneath the price cap or price floor, whatever you want to call it. Um, and now it's been bought, and now it's working down again. So this is classic technical stuff now. You got a market that made a crazy high, right? Rejected it firmly. Forget all the news and all the stories I'm telling you. And now you have the market retracing it. So uh, is this structure dominating, or is this structure going to take over some time? Elliott wave 1, 2, 3 type of stuff. So I think it's probably a good move to just look at Fibonacci's now. Down to this is your down move, and what is this? This is probably like 2/3, and this is probably like 1/3. You see, like in a pinch, you go with things like Fibonacci's. I like to use Gantt speed lines, but Poly has served me well. So anyway, And here we are, silver's melting down again. So I would just say, just using his analysis here, we get below 89.33, we should go 87.75. That's what I think. Now, if we get below 89.90, 89.33, and then close an hour back above it, we should go back up. You follow? If we get below this, then this structure is going to go all the way down here again, right? If we get below it and go back into it, then this structure is going to reassert here. That means the buying here moved up higher. Anyway, that's it. Have a great day.